Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Reliance Industries announces the merger of TV18 Broadcast, Den Networks and Hathway Cable into Network 18. The appointed date of the merger is set for the 1st of February 2020. China's Hubei province adds over 1,800 new cases of the COVID-19, with the death toll now rising to 1,863. Investor demand for India's first long-term repo operation exceeds the funds on offer by nearly 8 times. The Reserve Bank got bids worth 1.94 lakh crore rupees compared with the 25,000 crore rupees on offer. SEBI has decided to tighten eligibility criteria for investment advisors. It will also introduce an upper limit to their fees. And lenders to Diwan Housing Finance get expressions of interest from 15 bidders ahead of the deadline ending on Monday midnight. This was told to Bloomberg Quint by 2 people in the know. Now, the US markets were shut yesterday on account of a holiday, but the coronavirus continues to play a part there, and that threat continues to take a toll on global businesses as well. Apple has put out an update saying that it will miss its quarterly revenue guidance as the total number of cases in China climbed past the 72,000 mark. South Korea too has confirmed its 31st case of the virus. Yvonne Mann and Tom McKenzie of Bloomberg News get you the latest update.
Not a huge surprise from Apple, but this is the second time that they've had to readjust their revenue forecasts, all of which have been China related. First, it was with the trade war back in 2019, and now with this coronavirus outbreak. And this time they're saying it was because the iPhone production temporarily constrained. They said, as you mentioned, production has been slow to ramp up. It's been slower than expected. They were anticipating their factories would reopen on February 10th, which it did. But the process has been slow as factory workers and their manufacturing partners look to contain the virus, so they haven't been at full capacity. And on top of that, demand for iPhones has been reduced. There are stores that are temporarily closed for now. Those which are still open, though, are operating at reduced hours, and they've been seeing lower in terms of customer traffic as well. So there is the both duality of the concern of supply and demand. But you just spoke with Mehdi Husseini from Susquehanna saying perhaps the biggest question mark is still the demand picture.
Yvonne, so given what's happening to Apple, should we then expect more global tech firms to adjust guidance as well?
Yeah, and you heard from Husseini who mentioned that this might just be the tip of the iceberg, and a lot of companies might use this whole Apple development as an excuse to cut their own guidance as well. But so far, what we heard from Apple, their forecast for revenue for the second quarter is around $63 to $67 billion. They haven't offered any kind of new guidance for March. They said we should be knowing more during their earnings call in April. But the situation, they say, is, quote, evolving. But you talk about the tech supply chains that have been disrupted. We've already heard the likes of Nintendo unlikely to meet the production of its Switch gaming consoles. Facebook itself has said that they could see a drop in production in this Oculus VR headset. So you are seeing it kind of throughout the supply chain. And we also heard from Dan Ives from Wedbush Securities. This is a longtime Apple bull. He's still remaining outperformed for the stock, but he was saying that this is basically the worst fears from the street about what Apple had just said today, that this was going to dramatically impact their supply chains and now have a demand ripple impact worldwide.
So we continue to see this business fallout across the world. But Tom, it seems that at least the infection cases, the death toll, both from Hubei and nationally, are stabilizing somewhat.
That seems to be the case, yes. So the total number now for China in terms of infections, almost 72,500. The numbers of fatalities, 1,868. And the numbers out of Hubei province have risen at the slowest pace since this change in methodology last week. So certainly that's a positive, but it's worth reiterating the comments that we've heard from the World Health Organization, who've said, look, it's still too early to say if this is truly declining. But certainly the bulk of the cases remain in Hubei province, where, of course, the strongest and most draconian control measures are in place, and we haven't seen any major spikes in provinces outside of Hubei. So that is also something that seems to be giving a bit of optimism to officials here. But nonetheless, look, of course, Yvonne was touching on the supply chain issues, the issue of getting employees into factories, and we're feeling that, of course, not just on Apple, but across a number of businesses. The American Chambers of Commerce put out a survey of some of their manufacturers down in Shanghai. 90% of them have reopened their facilities, but 80% say they don't have enough workers to be at full capacity. So that remains a challenge, getting people into the factories, given, of course, that different cities, different towns have various restrictions on travel and movement and quarantine as well. So that complexity remains for many businesses. Bloomberg Economics saying that just last week, in terms of the entire economy here in China, just 40 to 50% of the economy was running at full capacity. And of course, all of this weighs on the broader economic picture. And now we've got a survey of economists suggesting that first quarter growth, you could be looking at 4%, a drop to 4% growth. That was down from a previous survey outlook in terms of the forecast there for 5.9%, from 5.9% to 4% potentially for the first quarter, again, as the pressure on the economy here remains. And this balancing act for officials, of course, trying to remain and continue the controls in place to check this virus whilst also trying to kickstart the economy.
And Tom, what are we hearing in terms of the messaging about the spread of the coronavirus?
Well, really tying back to the numbers that we've seen out today, Li Keqiang, the Premier, saying that he thinks that the spread is starting to weaken, and saying that, again, there haven't been any major outbreaks beyond Hubei, and suggesting that these control methods that have been put in place are working. Again, a note of caution, of course, from the WHO and others who say, look, it's still a little bit too early to tell. But it's noteworthy, of course, that the Premier seems to be relatively confident that they have a grip on this virus at this stage. But, of course, the concerns remain, and we've had the news that maybe now this flagship political annual event, the NPC, the National People's Congress, is very likely to be postponed. Normally starts on the 5th of March, early March, and continues normally for about 15 days. It sets the economic goals and targets for the years, the policy priorities, and it normally involves about 3,000 delegates, officials, business leaders coming to Beijing, to the capital, to meet over an almost 2-week period. But of course, the priority is ensuring that those officials are on the ground, wherever they are, whichever city or town or village, working through the question of how to contain the virus and get the economy back on track. So that seems to be the priority. And of course, there's a concern if you get all that number of people here in Beijing, it risks the spread of the virus. So it's very likely, it seems, that the NPC will be postponed. We don't have a date yet as to when it would be pushed back to, but that would be the first time likely since about 1985. So symbolically important, even if the practical implications are less significant, because Bloomberg Economics thinks that, look, in terms of the policy measures to support the economy amid this virus, that those will continue to be rolled out.
All right, now, as we bring you more updates on the spread of the coronavirus, let's also take a look at what else is happening across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
China, which may delay its most high-profile annual political meeting for the first time in decades because of the coronavirus. The National People's Congress is scheduled to start on March 5th, but according to Xinhua News, the country's top leaders will meet before the end of this month to decide if it's still going to go ahead. About 3,000 Communist Party members were expected to convene for 2 weeks of meetings attended by President Xi Jinping. Meanwhile, casinos in Macau will be able to resume operations on Thursday, ending more than 2 weeks of closures to curb the spread of the coronavirus. The city has reported 10 confirmed cases of the virus, but has not had any new infections for 12 straight days now. Fitch Ratings estimates the current crisis could wipe out up to $3.3 billion in cash flow for the city's 6 casino operators. And finally, Jeff Bezos, the billionaire, has committed at least $10 billion to fight climate change, announcing the Bezos Earth Fund in a post on his Instagram account. The Amazon.com founder and world's richest person says the fund will start issuing grants in the coming months. Bezos has been under pressure to balance Amazon's need for fast delivery with the environmental consequences of the rapid growth of online shopping. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keen, and this is Bloomberg.
All right, now this is the leg that some of you have been waiting for. It's the trade setup for the day, and Agam Vakil is joining me to tell you all about that, and also to tell you what's happening in the futures and options space. Agam, no cues coming in from the US markets. Of course, they were shut, but the Asian markets seem to be trading a little weak at the start today. How are we looking here in India?
Well, Alex, not encouraging trends because we saw some weakness in the last couple of days as far as the benchmarks are concerned. And that weakness, it seems that it's, indicating, further declines, but it's not as much as what we saw yesterday. So the SGX Nifty futures currently trending in the red. We've seen weakness in the Nifty futures, and for that matter, Nifty too, a lot of weakness in the broader market indices, as was the case for the banking indices. But let's take a look at what's happening when it comes to your ADRs at this point in time, or rather fund flows, of course. And again, the numbers were a lot smaller, even though both FIs and DIs sold in the markets. DIs to the tune of 154 odd crores, FIs selling stock worth 374 odd crores. In terms of contributors, we had HDFC, Reliance Industries, and ICICI Bank, which was largely weighing down on the indices. And in terms of futures and options, as I was suggesting, the Nifty futures looking at weakness, and we are seeing further unwinding there with a 2.7% decline in open interest as far as the Bank Nifty futures is concerned, about 10.5% unwinding coming along there as well. Still a 500-point range between 12,500 and 12,000. We've seen a lot more writing around the 12,200 and 12,300 calls, and that's where we've seen a lot of activity. Moving on to your VIX, that has also risen by around 6% at around 14.4. The Nifty put call ratio also coming off further to around 1.1. And in terms of stocks, a lot of stocks which did see a lot of weakness. Muthoot Finance, however, did advance and quite substantially, up 17% in just one day. On the other hand, IGL in LIC Housing Finance were under pressure, along with Mindtree. In terms of stocks which saw unwinding, let's pull that list up. So we have Ramco Cement, Power Grid, and Manappuram Finance, among others, which are seeing a decline in open interest. It was a weak day of trade, second straight day of declines, Alex. Can we see that trend continue? That's something we're going to have to see.
Absolutely. Thanks so much for that, Agam. A clutch of stocks that you have to watch out for on account of them being in the news. Nikki Mirchandani is joining me to tell you all about them. Nikki, what do you have for us?
Sure, a bunch of them. I'm going to start off with few stocks like Network 18, TV 18, Den Network, Hathway Cable. All of these are expected to be in focus today. Reliance Industries came out with an announcement last night where it said that TV 18, Hathway and Den will now merge into Network 18 Media Investment. Of course, the new broadcasting business of TV 18 would be housed in Network 18. And cable and broadband business of Den and Hathway, that will be spun off as a separate entity coming in for Network 18. And with this, the Reliance holding in Network 18 will reduce from 75% to around 64% upon implementation of the scheme. The share swap ratio is there on the screen for you to see. Also, we're looking at JSW Energy. That's again a different stock on the counter. The company has signed a share purchase agreement to acquire 100% stake in GMR Kamal Ganga Energy for an enterprise of around 5,321 crore. Now, at this valuation, at this enterprise value, the valuation was extremely cheap, but at the same time, the set is good and is going to be lifting up JSW Energy by 23%. Management says it's a good fit for JSW's stated strategy with 85% tied up capacity. And management also believe that the acquisition is going to be value accretive right from day one. We're also looking at JSW Steel, which has been declared as a preferred bidder for 3 Odisha iron ore mines. Although this development comes in as a clarification on account of the ongoing Odisha mines, but then it can be a tad negative because reports otherwise have been suggesting that it has backed 4 mines, one of which where JSW Steel has not been announced as a successful bidder is a big mine, which is of 16.5 MTPA. So expect some amount of negative traction on account of that. Phenolics Industries again expect negative reaction on this counter, where a force majeure has been declared by the company's major VCM supplier during March 2020, which is expected to impact the operation for a span of more than a month time. Also, we're looking at Huhtamaki PPBL. That earnings has come in extremely nice. And top line, we're looking at a 10% growth. The numbers have been extremely muted, but the bottom line looks a little elevated at 3.8 times growth out there. Margins have been impacted due to high raw material costs. But if you look at the bottom line performance, which has staged more than 3.5-fold jump, that is on account of tax write-back, which is to an extent of 32 crore, which in turn has aided the bottom line performance of the company.
Right, Nikki. Thanks for that. All right, now creditors of Diwan Housing Finance have been able to drum up quite a bit of demand for the beleaguered lender, or rather for its assets. There have been several expressions of interest for DHFL's loan book under the IBC. Vishwanath Nair of Bloomberg Quint reports.
At least 15 potential bidders have submitted their expressions of interest for purchasing DHFL's loan books. Now, these could be the entire loan book of the DHFL lending franchise, or could be just the specific retail as well as wholesale lending books, which have been separated by the lenders, is what we understand through sources. Companies such as Bain Capital, Welspun Group, KKR, Arcel, as well as Oak Tree Capital are all looking to invest in the entire loan book of the housing finance company. While other bidders such as Deutsche Bank, Edelweiss Group and Piramal Group are looking at some of the more specific lending groups rather than the entire book, is what we understand. Now, if you remember, last month the lenders had decided that bidders could either bid for the entire company or they could bid for specific loan segments depending on their risk appetite. So that is what is coming out now. By midnight Monday, the deadline for submitting expressions of interest will end. Now, remember that submitting an expression of interest is only the first step in the entire process. After this, these potential bidders will receive the financials of DHFL to conduct their due diligence, and only after that will they decide whether they actually want to participate in the process or not. Typically, in cases which are being resolved on the IBC, the EOI numbers are high, but the eventual bids are usually lower. Of course, we'll still have to see how DHFL's insolvency proceeding pans out. Remember that this is a test case, and this is the first NBFC where the Reserve Bank of India has initiated an insolvency and bankruptcy process. It started that back in November of 2019. After that, the board of the company had been superseded and an administrator had been appointed who is now working with the lenders to try and resolve the stress in the company. DHFL stress started immediately after the IL&FS crash that happened in October of 2018, largely because there was a liquidity crunch in the market, and that led to a lot of issues, financial issues for DHFL. Of course, after that, there have been multiple other cases, such as diversion of funds, which are being investigated by investigative agencies.
Here's something that you need to know about if you're getting help with your investments. Market regulator SEBI has decided to tighten eligibility norms for investment advisors. It has also decided to introduce an upper limit for their fees. The regulator has finally also barred the use of titles like independent financial advisor or a wealth advisor by those dealing in the distribution of securities, unless they also have the tag of investment advisor as per the SEBI. Now, here are some of the key highlights from Ajay Tyagi's last board meeting as SEBI chairman.
First is segregation of advisory and distribution activities at client level. Individual investment advisors shall not provide distribution services. Investment advisors allowed to provide execution through direct schemes. Requirement of an agreement between client and investment advisor incorporating terms and conditions regarding investment advisory service. Clarity in payment of fees and upper limit on fees charged to investors. Enhanced eligibility criteria for investment advisors while grandfathering of existing individual investment advisors from complying with certain enhanced norms. For REITs, amendment approved to provide for fast-track rights issue of units of REITs. For InvITs also, one amendment was for providing for fast-track rights issue. The other one was on the experience part of the investment manager as an alternative to the existing requirement. It was approved that combined relevant experience of not less than 30 years of the directors, partners, employees of the investment manager shall also be considered. So both alternatives are available now. the recategorization of small cap, mid cap and large cap, we are actively looking at that, and we will soon come out with I don't know, I don't want to give a timeline for that, but we certainly are examining that issue. Power of attorney misuse in Karvi, we have come out with, if you have seen last week, for online system, which is a detecting system, which is inbuilt in SEBI, where we'll be able to actually make the books of brokers online, and we'll be able to see where any misuse is taking place or any wrong thing is being reported by the brokers. That is on the detection side. We're also working on the preventive side. And one of the reasons why this repledge amendment we are doing in the DP regulations is to enable that. So we will soon come out with a circular on that to address the issue of that Karvi-like incidents don't take place, or they're at least contained in future. Yeah, we are examining it in terms of the orders which were passed by the members last year, and legally we'll that is under examination. For an organization like market regulator, there will always be challenges. So it is never, you can't say that you have done everything. So there will always be challenges. It's a very vibrant sort of a organization, and naturally so. And there are many things which, in fact, we try to address most of the regulations, if you see, and on all the issues on the investor protection or on development side, or on the regulatory side, we have tried to address whenever it came to a notice. We also tried to address the shortcomings which came to a notice. We were prompt. We decided very many old cases, although I think enforcement thing needs further improvement, which needs to be done. So there are many things which were done, many things to be done. I won't really want to get into as to what needs to be done. That is for the person at that time to decide.
All right, let's take you through some of the stories on the website BloombergQuint.com if you were to take a look. Investor demand for India's first long-term repo operation exceeded the funds on offer by nearly 8 times as lenders rushed to borrow cheaply from the central bank. The Reserve Bank of India received 63 bids worth 1.94 lakh crore or nearly 2 trillion rupees and called the response highly encouraging. It accepted bids worth 25,000 crore rupees and the yield on the 10-year benchmark did not move very much yesterday, ended about a basis point higher at 6.39%. UV Asset Reconstruction Company has proposed a resolution plan for the bankrupt telecom operator Aircel and its subsidiaries Aircel Cellular and DishNet Wireless. Under the proposed resolution plan, which has been approved by the Committee of Creditors, the ARC will issue zero-coupon optionally convertible debentures worth 6,600 crore rupees against the secured financial creditors' claims of around 19,600 crore rupees. All right, that's a wrap on this edition of All You Need to Know, but you know this. There's a lot more to talk about, and you'll find all of that right here on Bloomberg Quint. Thanks so much for watching.